Good afternoon, Aria. How are you? Good seeing everyone here again on virtual meetings. Welcome. Just in case you don't know who I am, I'm Amy Kong. I am your 2021 Aria National President-elect. So I'm so happy today because we'll be hearing from Freddie Mac Chief Appraiser, Mr. Scott Reuter here. He's an incredible resources who will be updating us on the appraisal requirements. I'm sure you will find all this information really helpful. Freddie Mac has been an incredible partner of ARIA since the beginning. They are bringing us these exclusive webinars so that our ARIA membership can stay up to date on industry changes during this particular COVID-19 situation. However, you don't forget because May is the Asian Pacific American Heritage Month. What are your plans in sharing with others that you are a proud Asian American living here in the US? Love our communities and share our lives with each others. We will be unveiling our 2019 to 2020 State of Asia America report next Tuesday, May 12th, 8:30 a.m. Pacific Standard Time, remember Pacific, which will include some incredible data from Freddie Mac as well. Thank you so much. Well, without further ado, it is my great pleasure to introduce our friend, Ms. Carmen Mercado. So Carmen is the Affordable Lending Business Development Senior Manager at Freddie Mac. Carmen is responsible for building and managing industry relationships as part of the affordable lending team. Carmen is committed to building awareness of Freddie Mac's offerings to support responsible lending, provide sustainable homeownership, and improve access to credit for all borrowers. Ladies and gentlemen, welcome Carmen.
Thank you so much, Amy, and thank you, and hello to Aria. I know we don't get to see each other in person anymore, but like Amy said, we're really proud of the partnership that we have formed with Aria. Really looking forward to the information that's going to be on the State of Asia America report. So I reiterate, absolutely make sure you tune in for that, right, Amy? It's going to be some really good information. Today we wanted to bring you under the current environment, make sure that we're providing ARIA members with the most relevant and up-to-date information that not only can help you in your business, but also can help any borrowers that you're working with right now or consumers that are reaching out to you. So we invited a special guest, and I'm very excited because I have been able to see Scott present in person, and it really is a phenomenal individual. Scott is the Chief Appraiser and Single Family Director Evaluation for Freddie Mac. He is a certified general appraiser with 30 years of experience in valuation, appraisal, and collateral risk management concerns. He also holds a bachelor's degree from The Ohio State University and has completed the Executive Leadership Program at Cornell University. His management experience includes positions with Bank of America, GE, Goldman Sachs. Scott is a second-generation appraiser and began his career as a fee appraiser. The valuation team at Freddie Mac is responsible to review and oversight evaluation consistency and quality, ongoing development and refinement of property valuation risk management strategies, and establishing and maintaining a credible quality assurance process across multiple lines of support. So it is with my pleasure to introduce Scott Reuter.
Thank you, Carmen. I appreciate the introduction. Thank you, Amy, all of our friends at ARIA for hosting us here today, including Vanessa, Jazz, and all the folks behind the scenes or literally behind the screens. Today, we very much appreciate the partnership and all of the good work that you do. I want to also thank my colleagues at Freddie Mac on the ALAC, the Affordable Lending and Access to Credit team, and the real estate professional outreach that they initiate. They work so hard all year long, and particularly Carmen and Monica, who I know are on the call today. They help me personally a great deal. So I appreciate the opportunity to be with you today. Quick disclaimer, I typically have a GSE disclaimer when I speak to the industry, just around reminding folks comments here today are my own, and any references to any Freddie Mac policy procedures are, of course, intended to be accurate. However, any of your viewers or listeners are encouraged to reference our published seller servicer guide with any questions or clarifications that might be needed. Firstly, I wanted to just kind of acknowledge that I know these are difficult times, and I hope everyone, given the circumstances, are bearing up well. And so given the current conditions and the challenges presented today, I wanted to just cover three things. Firstly, some of the changes in our appraisal requirements that both Amy and Carmen referenced. One, two, discuss some new details and expanded eligibility around our ACE appraisal waiver program. And thirdly, make certain everyone knows where to go to conveniently and quickly access our Freddie Mac resources, updates, COVID policy flexibilities, as well as our published FAQs. So let me start by providing an overview of understanding our temporary appraisal flexibilities. We understand that social distancing due to COVID-19 is creating challenges throughout the home financing process, and that includes and may be central to appraisals. It's understandable that borrowers and appraisers alike have concerns in the current environment, and to help ease some of those concerns and provide a way for lenders to continue to lend in a prudent and responsible manner, Freddie Mac, along with Fannie Mae, have implemented temporary flexibilities for property eligibility and appraisal requirements. These were announced in our 2020-5 bulletin, which was published, I believe, on March 23rd. As I referenced, we've been working closely with our friends at Fannie Mae under the guidance of our regulator, FHFA, to introduce temporary measures to help provide this clarity and continued flexibility that hopefully will be met in a prudent and responsible way. We're actively monitoring the developments and will continue to issue additional guidance as appropriate. The goal here, just at a very high level, was to have the GSEs align on very consistent policies for the industry. Our temporary flexibilities were further expanded in guides 2020-8 and 11. So those are also appended in some of the resources which we will share with you at the end of the webinar. So as it relates to our guidance for COVID-19 in the 2020-5, it covers a wide scope of the flexibilities due to the pandemic, including temporary guidance related to our credit underwriting requirements, the use of electronic signatures and records, title insurance, as well as temporary guidance related to our property valuation requirements and the expansion of ACE, the automated collateral evaluation eligibility. So I'm going to speak in some detail to the last two. Those are very close to me and our evaluation team. For property valuations and the appraisal flexibilities, that we understood again that due to the COVID-19 pandemic, there would be instances where a seller honestly is unable to obtain an interior appraisal of the subject property. And as a result, we're allowing temporary exceptions to the property eligibility and appraisal requirements, and have revised the inspection and reporting requirements around that. For certain mortgages, when a seller, so in our case, when we say seller, we mean a lender or a bank. When a seller cannot obtain an appraisal with an interior inspection, Freddie Mac will accept either an appraisal with an exterior only or a desktop appraisal. Based on the most flexibility we are providing is with purchase transactions. When you reference our 2020-5, there's an inset table, and in that grid, it goes by property type, the eligibility and the flexibilities that we are offering. As key points, part of the temporary exceptions, or as part of the temporary exceptions, the desktop and exterior only options will be permitted, as I said, for certain purchase transactions, and exterior only appraisals will be permitted on certain cash out refinances where the mortgage being refinanced is owned by Freddie Mac. For in the buyer space and the purchase transactions, sellers are encouraged to obtain a desktop appraisal in lieu of an appraisal with an exterior only inspection, when an interior or exterior inspection is not available. We set at Freddie Mac minimum scope of work for our appraisals. So as part of the minimum scope of work for a desktop appraisal, we do not include, does not require an inspection of the subject property, and that does not include an inspection of the subject property. So the appraiser in those instances, when they're performing a desktop assignment on a purchase appraisal, for instance, the appraiser relies on public record information, MLS, multiple listing service, or other third-party data to help identify property characteristics. From a process standpoint, when a desktop appraisal is obtained using the 1004 Form 70 appraisal and then submitted, the appraisal is, as it comes through the portal, is assessed for what we call valuation, rep, and warrant relief. A lot of your lender friends will understand that's an important aspect in terms of making the loan more attractive from a purchase certainty perspective. Appraisals with a risk score of 2.5 or less meet certain requirements, and then they receive valuation, rep, and warrant relief, and they have the benefit of, as they use the LCA tool to aid in that process. We also use that as a scoring mechanism from a quality perspective on the inbound appraisal. And the developmental flexibilities we offer to the appraiser include, if you're doing a desktop assignment and you actually never leave your home office, you're not really getting by the subject property. So there's some things that we have the appraiser must have competency, geographic competency to do the appraisal, must have adequate information and data, and must have credible information. And the flexibilities include, just as an example from a developmental perspective, how does the appraiser obtain subject photos for a desktop appraisal when they're not leaving their home office? So we allow photos to be obtained from sources such as third-party websites, homeowners, listing services. These are all acceptable with the caveat where there are no use restrictions to use those photographs. And appraisers must have adequate information, just in terms of background for you, appraisers must have adequate information to complete the desktop or the exterior only assignment. There are with some outside of our profession that think that you just can make a lot of assumptions and then complete that assignment. And that is not the way that those assignments are to be developed. We understand you're not getting inside the property, but it is incumbent on the appraiser to gather enough adequate and credible information to do that, complete that appraisal report. So we're allowing, again, appraisers may use information in MLS. They may reach out to real estate agents and real estate brokers, may contact the homeowner, in addition to the use of public records or really any other online tools that they have at their disposal. There's a tremendous amount of technology, satellite imagery, street views, that, again, appraisers can get their hands on in most areas, a lot of areas, if not most areas, to obtain adequate information about the subject property. If for some reason, however, that information is not available, then the appraiser cannot move forward with the assignment, and then that would not be eligible at that point for sale to Freddie Mac. We understand from a lot of AMCs, our appraisal management company partners, that friends, that they're placing those orders on hold for the time being. If an appraiser happens to be in an area that's firmly shelter in place, some of the counties in the San Francisco area, there was a prohibition to even getting around on the streets. So we want to be sensitive not only to the safety of the appraisers, but recognize that there may be communities where these even drive-by and exterior-only options might not be a possibility. Those loans, we're being told from a practical standpoint, are simply just being held. The flexibilities also extend to new construction loans. So in our guide bulletin, that second guide bulletin, I mentioned 2020-8 extended the temporary flexibilities to allow desktop appraisals for new construction purchase transactions that were effective immediately. On those transactions, we require a little more documentation from the appraiser in a way of photographs and plans and specs and a variety of other things, and those are detailed and noted in that bulletin. And with the temporary exceptions in place, we've been asked if lenders should simply, from a process perspective, just default to ordering desktop or exterior only inspections off the bat. So right, there's not a waterfall. If you reference our grid when you pull it up, and I encourage you to, which you may have already done, just revisit it, that there are permissible product types listed, including a full 1004 Form 70 traditional appraisal, 1, 2, a desktop appraisal, and 3, an exterior only. It's not a waterfall, it's any of those products. So as a best practice, lenders we talk to our lender partners all the time, and they may want to develop a protocol where they first submit loans to LPA, which is our loan product advisor, to see first and foremost if they receive an ACE waiver eligibility offer. If they receive an ACE eligibility waiver offer, then an appraisal isn't needed. And that may be an option. It may be a nice option. It's certainly a safe option given the current circumstances. If, however, an appraisal is needed, lenders can decide the best approach and based on what's permissible given the flexibilities and based on any unique circumstances that they may have in their certain area. One thing that's of interest, and it may be coming up in your professional organization, is we have seen, heard, and are currently examining a lot of the tools and technology that are out there now, particularly the the virtual inspection apps that are proliferating and becoming very commonplace across the market. So there are some people that have been in the space for a long time, and there's some that are popping up here rather recently. And while we don't have anything formalized from a policy perspective around this, from a personal perspective, some of these tools are pretty neat. And what a great way for an appraiser to gather some additional interior subject property information is to be able to consume that through an app. For mortgages, however, that require an interior and exterior inspection appraisal, the use of these technologies right now is not sufficient, NOT, not sufficient to meet the requirements of a physical inspection by an appraiser. So if you get if an appraiser, for instance, gets a full 100470 interior exterior appraisal order, they cannot complete that assignment unless it's completely safe for them personally to get in that property now. So the virtual inspection, unfortunately, does not comply and is not sufficient to comply with the current interior and exterior form requirements. What the appraiser can do, however, is on those desktop and exterior assignments where, again, we have set a minimum scope of work, the appraisers are free to voluntarily deploy this technology as a means of augmenting exterior only and desktop appraisal flexibilities that we announced for COVID-19. The appraisers, again, are encouraged to use this technology. We have no requirements around them, but they are confined to additional scope of work and additional diligence that they're working to do on these desktop and exterior only assignments. Parenthetically, we may learn a tremendous amount through this pandemic, that some of these technologies offer a lot, and we can begin to measure and see how we can safely consider these potentially for broader use post-COVID. Many of you that have been involved in the industry, we worked at the agencies past couple years on appraisal modernization effort. It was a APP, Appraisal Process and Policy, and it was a scorecard initiative from our regulator, FHFA, around having us work on ways to innovate and update and modernize the appraisal profession. So the first year and a half of that initiative, me for Freddie Mac, and I had a counterpart at Fannie Mae, we were out on the field, out in the industry, out at conferences and various industry events, engaging on what modernization might look like. For us, we listened, we engaged, what are pain points, what are concerns, where can we really meaningfully come up with something? And there were some pilots that our counterpart and we put up, and it was, bottom line, there was a fairly negative reaction to modernization from an appraiser's perspective. And there's a lot of stakeholders and constituents across the space. Appraisers are only one, but they're a key one. But so are realtors and brokers, and so are banks and lenders and mortgage companies and AMCs and everybody across the spectrum. So the opinions, my point is, the opinions varied on where you sat, and the appraisers had a very dim view of a lot of the modernization ideas and techniques we were teeing up. Well, fast forward now 2 years to this awful pandemic that unfortunately is becoming rather a catalyst for change. So we're looking at some of these things a little differently now. They're not just solutions that we're looking for a problem. We have a problem, and maybe there are some technologies here we can really look to not only help, but there may be an interest in bringing some of this innovation, some of these video apps, virtual tools, eventually from the margin into the mainstream. But that's just kind of a parenthetical role, just a comment on where this might go. I'll say that the appraisal community has done really a terrific job in adapting to the flexibilities. We engage with appraisers all the time, and we monitor the inbound work. We sample and monitor the inbound work. We do see some trends and areas for improvement. We kind of really discuss those more with our appraisers in terms of, there's a couple of technical fields, a couple of technical things developmentally, and there's a couple of fields we're repurposing on the report that they're getting a little tangled up on. So we've clarified some of our messaging there. We're also currently clarifying some of the messaging around how to develop desktop and exterior appraisals. It's a space where a lot of appraisers haven't been in a while. So we're reminding them about, you cannot make assumptions. You still need to do a level of diligence. You still need to obtain adequate information. That information needs to be credible. So just kind of reminding our appraiser friends what they need to do and the steps they need to take. And in my view, a lot of what we've done in the appraisal space and offering these flexibilities has hopefully gone a long way to ensure that appraisers stay safe, that brokers and everyone in the mortgage fulfillment process stays safe. And by broadening our guidelines and allowing the desktop and exterior only options, we feel that the lenders and the appraisers do have additional options that they can exercise. The balance here for us was first and foremost the safety of the appraiser, along with prudent risk management policies and oversight for us at Freddie Mac. So the other item I wanted to cover a little bit just in some of my remarks was around our waivers and our ACE waivers. So ACE is automated collateral evaluation, and we're constantly innovating and improving our loan advisor to meet the needs of clients. And our ACE product is very central to that. ACE was sort of conceived as and developed as a very innovative offering that's consistent with us trying to bring a lot of efficiency and reduce costs to the market, as well as the aforementioned greater purchase certainty for our sellers, as we continue to manage day-to-day business and manage collateral risk. By way of background, ACE is a LPA, a loan product advisor capability that leverages proprietary models, a little over 40 years of historical data, public record data, and that allow lenders to underwrite certain loans without traditional appraisals. So we've been out in this space for a little while now, and we have just a very small margin of offerings pre-COVID. But basically, when an appraisal waiver is offered and accepted by the lender is not only offered rep and warrant relief, but they do not have to obtain a traditional appraisal. And it's important to note that Freddie Mac offers that when we offer the ACE appraisal waiver, we have not performed in those instances any valuation of the mortgage premises. We're making a risk decision based on that information that we have by leveraging the models, the algorithms, the data, the public record data, the MLS data, and those are all working to make a risk decision about the property. From a practical standpoint, how does ACE work? You may know the lender submits a loan to our LPA system. You specify the estimate of value, or on a purchase, the sales price of the mortgage premises. The ACE models determine the acceptability of the value or the sales price on the basis for underwriting, and then uses the available data and the modeling to assess the condition of marketability risk that might be associated with that property. So if the analysis comes out the other side and determines the risk is acceptable, LPA generates a feedback certificate that indicates the eligibility, the loan's eligible for collateral warrant relief with a waiver, and then the lender can originate that loan without an appraisal. So that's a long way to say you can leverage this technology in times where it's either timing under normal circumstances or now COVID, pandemic, and health concerns. This may be an option in a lot of markets. So ACE was originally developed to assess risk in a very objective manner by leveraging our market-leading valuation model, which we're very proud of, which is HVE, the Home Value Explorer. We leverage big data and advanced analytics to help assess the value and condition of the property. The HVE confidence score goes along not only with the generated value, but it's a dimension of something that doesn't exist in appraisals. So we think it's a major advantage for ACE in terms of leveraging models that make informed risk decisions. And again, we were very proud of this product before. We think it's got a place in the marketplace permanently, and we think it particularly has addresses a tremendous need right now in this COVID-19 environment. It's from a strategic perspective, I think ACE is an example of our continued investment to help our lenders develop or rather deliver better borrower outcomes. It helps cut costs and reduce cycle times. We constantly, this kind of sits in my world where we have a valuation team who oversees, tests, and monitor. We work alongside our MEDA, which is MEDA, which is our modeling, econometric data and analytic team to monitor the performance. So we continually monitor the performance of ACE and the models that kind of generate or power it, as we do with all of our risk tools, not only to better understand and manage our risk, but to see where we may have opportunities going forward. And the performance of these loans, I've got a piece of wood here on my stand-up desk, knock on wood, the loans have been performing very well. So loans funded with similar pilots over the past, I think 12, 15 years have performed as well as loans with similar risk characteristics that leverage an appraisal. So anyway, enough bragging on ACE, but just by way of a little background, just a reminder, ACE is out there. The waiver product is tremendously sophisticated. The modeling and the analytic team at Freddie Mac did a great job in developing this tool, and we work very, very hard on ensuring that not only it's monitored and continues to perform, but it's going to continue to excel and really offer some benefit in the marketplace. And really, one of the real benefits that it offers is from a consumer perspective, is in the cost and time savings. So ACE directly helps lenders and borrowers by cutting costs in the loan origination process. So number one is the appraisal fee that you save if you generate a loan that's ACE eligible. So depending on what market you're in, that's an estimated savings of as much as, between $300 and $700 roughly. That's a kind of a large range, potentially more depending on your market in. 1, 2, your rate lock fee. So a shorter rate lock period potentially can save thousands of dollars over the life of a loan. And 3, we hear that in speeding up the underwriting process, you can potentially close a loan 7 to 10 days faster. All of those result in cost savings to the borrowers and to the lenders. So there's a tremendous benefit, and we have expanded the eligibility during this COVID-19 to include a wider breadth of loans. Just as a reminder, condominiums are eligible for ACE. So on condo units that run through LPA, our loan product advisor, they assess for the ACE waiver eligibility. If you receive and accept ACE waiver eligibility on a condo unit loan, you still need to complete the condo project review. So a condo project review, as a practical matter, is still required to determine product eligibility. And there is a value limit on loans. The value limit on properties that are eligible for ACE is 1 million max for estimated value or sales price for a property to be eligible for ACE. So really in closing my prepared remarks, I would say in light of social distancing with COVID-19, our hope is that not only with the appraisal flexibilities that we have stood up and we're continuing to monitor and improve, and the ACE and the expanded ACE appraisal waiver eligibility, that this will offer some increased relief. We hope that ACE particularly helps alleviate the social distancing concerns and limit the contact between appraisers, property owners, home buyers. The ACE product, as well as the desktop and exterior only options, certainly achieve this too. So we encourage our lenders through all of you to, always submit your loans to Freddie Mac, but we encourage you, if you submit your loans to LPA, Loan Product Advisor, prior to ordering an appraisal, you can determine if it's eligible for an ACE waiver. And then if it is, that's good news and you have options. If it's not, you may still also have options under our existing published COVID-19 flexibilities. So anyway, thank you for your time. If there's anything else I can immediately address, I'm happy to do so.
Amy, I think you're muted.
All right, so sorry, I forgot I'm muted. So thank you so much. That's a great session, Scott and Carmen. Thank you so much for bringing all this information to us. So I'm so happy that, Appraisal is also looking into technology to help, right? But no matter what kind of technology that we're adopting during this challenging time, I guess safety is the key, when we are conducting our businesses, right? So, and again, thank you so much, Freddie Mac and Scott and Carmen, for sharing. Aria actually is here to really committed to continue to provide information and helpful, valuable webinar to our membership. So stay tuned and don't forget to attend our State of Asia America report revealing next Tuesday, okay, May 12th at 8:30 a.m. Pacific Standard Time. So thank you so much, everybody, for attending this particular session. And I wish you all well, stay healthy and happy, everyone. So see you next time.
Amy, this is Carmen. Can I just share, if you don't mind? I wanted to share before we end the session a couple of resources that are available to ARIA membership. Is that okay?
Absolutely, take it.
Excellent, thank you. So for those of you that are still logged on, I'm really excited to share with you that Freddie Mac launched a campaign called HelpStarts Here. And it really is during, like, Scott said, we're in unprecedented times, and we know that you are at the forefront working with the communities that are reaching out to you, looking for guidance in terms of what options are available to them. So not only the buyers that you're working with now, but maybe your past customers. So the HelpStarts Here campaign, which you're seeing on the screen, it really is a very interactive experience. It is guided towards borrowers. So these are current homeowners that are looking for information and solutions that are going to help them identify their unique needs and what options are available to them today. So we really do encourage you to go out there and take a look at some of the resources that we have, especially through the HelpStarts Here campaign. This is something that you can actually share with your network, past customers, current customers, use it as an educational tool that will help really the homeowners understand what they should get ready if they are in need of any relief, where they can go to access that information. So we know that they're calling you, you're calling them, you're the boots on the ground right now. And we wanted to share this resource with you so that you can make sure that you can provide that, and you can share this via your social media links, during your own company website. And if you go to the next slide, which we also have some additional COVID-19 response. I know that some of you were on the COVID-19 response webinar that we did with Tony Hutchinson. But just a reminder, if you were not on that call, Freddie Mac, if you go to the FreddieMac.com, you'll see a COVID-19 response page that looks just like this. It'll have the most updated information for either renters that are looking for some relief, as well as for homeowners. So we do ask you, go on to this website and you will always be able to see the most relevant information. We're putting out updates on a regular basis. If you go to the next slides, it'll just show you what the client resource page looks like. It really is a repository for anything that's changing, any guide bulletins, updates, and you'll always see under the latest news, any policy announcements or press releases, it will be dated so that you can make sure that you are reading the most relevant information. You go to the next slide, you're just going to see there's a page for you to sign up and subscribe. So if you don't want to be going to the Freddie Mac website every day, which under these circumstances, I do recommend that you make that a kind of your daily routine. It's a great place for you to make sure that you're giving information to your consumers. But if you want to, you can actually just go and subscribe for a news insight. And what that will do is that when there is a news update or information update, it'll go right there to your mailbox. So you don't have to go fishing for it or figuring out where to find it. So I really just encourage you to do that. And just, you know, Amy, thank you again. And Aria, for everything that you, Scott. I always, every time I hear you, I learn something new. So thank you for coming into the Aria family and sharing your knowledge and your experience. That's all I really have to share. I just wanted to thank you all. I know we will have one additional training session scheduled with Aria, and that information will come to you, and that's going to be from the servicing side. So hopefully you found this useful. And Amy, thank you again.
Thank you so much again, Carmen and Scott and Freddie Mac. And I wish everybody well, and see you in the next one.
See you
Bye-bye.
next time.
Thank you.
Bye-bye.
Bye-bye.